Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to discuss what a week we have had in the market. The absolute excitement the market felt at the beginning of the week, and what that actually means. And I want to ask the question, and I want you guys to also share with me your opinions as well on this. Is the market kidding itself that the worst is over? But anyway, before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With it out of the way, let's get started. So yeah, what a week we have had. Now, those of you who watch my program, who watch me regularly, we did say on the last Friday's, a week ago's episode, that one of the big events happening this week was what was going to come out of the weekend. Negotiations between negotiations in Switzerland between the US and China. And there was a lot of excitement, which was building up about what will happen at these weekend talks. And then Monday, we did indeed have the huge announcement we'd all be hoping for, because US announced on Monday reduction on tariffs on China to 30% from 145%. In return, China announced reduction to tariffs on US goods to 10% from 125%. And as you might have guessed, for the market, there was much rejoicing. Absolutely much rejoicing. The market saw this as a huge boost to hope that there was indeed light at the end of the tunnel in reference to this trade war. It wasn't all doom and gloom. And indeed, the market rallied. And in fact, many people or many analysts are asking, is this the fastest recovery ever? And let's have a look at that. Okay. This is, of all the big crashes we've experienced over the last, say, 16, nearly 20 years. Okay. So if we have a look at the first one here, this is the dot-com bubble. Okay. The market dropped 51% over 638 days. It took the market 1,165 days to recover. Then we had the credit crisis, something I remember very well. I remember that day very well. We had a 58% fall over 352 days. And it took the market 1,009 days to recover. Then, of course, we had COVID, and we all remember that. The market fell by 35% over 23 days. It took 103 days to recover. Then, of course, we had the inflation and Ukraine war, where the market fell 28% over 195 days and took 370 days to recover. And then we had this tariffs. April the 2nd, Liberation Day, where basically, the market fell 21% over 33 days. However, as we will have a look in a minute when we bring the market up, it is already on the road to recovery. Where it fell on Liberation Day is already recovered, the S&P 500. So indeed, in many ways, this is indeed one of the fastest recoveries we have seen in such a decline and such volatility. Moving on for the rest of the week, what happened next? Again, more good news, more news for the market to be happy. Tuesday, we had US CPI announced year on year at 2.3% versus 2.4% expected. Month on month, announced at 0.2% versus 0.3% expected. So this was the first bit of data that many analysts thought we could start seeing the signs of tariffs on this. But it wasn't. It wasn't scary. So the market started asking again, what inflation fears? What inflation fears? And in fact, on that point, inflation actually then was actually a 4-year low. You know, we haven't seen this sort of decline since 2021. But here's my point. Here's my point. And this is a question I want to ask up to you guys as well. There was a lot of fear that back in 2021, when we started trying to get ourselves back together and everybody started going back to work after being locked in COVID, that we would see, you know, a dramatic increase in inflation and an economic slowdown because of it. It didn't happen straight away. It didn't happen. In fact, like I say, it hit a low. But then after that, during the end of 2021, leading into 2022, we had the inflation crisis. So again, my question is open to you guys. What do you think? Is this the calm before the storm? Are we not actually going to see the impact of this trade war and tariffs on inflation and the economy till maybe June, July, like we did in 2021? Anyway, moving on to some more good news before we have a quick look at the market. Thursday. What happened Thursday? Again, more positivity. Slightly. Because I think there's an underlining current on it. US retail sales announced 0.1 versus 0% expected. So indeed, they thought, okay, you know, tariffs are going to scare people. We're going to get 0%. However, we didn't. We get 0.1. But that's a huge drop off from last month. Retail sales last month was 1.6. Now, yes, you can argue there was a rush of consumers going out to buy stuff before the tariffs hit, hence the surge to 1.6. But the fact it's dropped down to 0.1 is a telling sign that maybe, just maybe, we are beginning to see what the consumer thinks. It is beginning to take effect. And this is what we're potentially overlooking. And finally, on Thursday, a couple more things I want to say before we go into the market. Out of the deal, more good news. Trump announced that Qatar, he's going obviously doing a Middle Eastern tour at the moment, announced that Qatar will spend $92 billion on buying planes from Boeing. This is good news for Boeing. And finally, before we go to the market, finally, today, Trump has announced that tariff rates for trading partners will be set within the next few weeks. This is important, okay? Because other than the trade deal with the UK, which is not finalized, and the negotiations and, you know, the calming down of the trade war between the US and China, we haven't seen anything yet. Because the 90-day delay on reciprocal tariffs is expiring on the 9th of July. We've yet to see any deal. So as it stands, and again, I'm asking the question to you good people, let me know what you think. Everything is great, right? Well, we're going to look at the market now. S&P 500 is indeed set, apparently, in pre-market for the 5th day of gains. But let's have a quick look at the market, see where we are, because obviously the US session isn't open at the moment. Usually, I go on around about an hour later so we can cover the US session. But like I say, look, we are set in pre-market to open with the 5th day of gains. But as you can see, we've had, after that Monday, gain, slight calming down on yesterday, Wednesday, and then gain. But like I say, you can see, this is what I'm talking about, the recovery. On April the 2nd, it declined massively, but already it's recovered from that shock. You can say that with the Nasdaq as well. Nasdaq is the same. It's also recovered. It looks set in pre-market to close on its 5th day of gains, and so is the Dow Jones as well. Obviously, we look at the Mag 7 quickly. Obviously, it's not open yet, but we have indeed got obviously Tesla slightly negative yesterday, Meta slightly negative yesterday. But like I say, in general, the market is still pretty optimistic, and we are set to get potentially the 5th day of gains. Anyway, I want to go back to my original point, though. The vision, what I wanted to talk about. And again, this is up to you good people, to tell me what you think. Everything is great, right? Everything is fine from Monday onwards. We're all looking good, and everything's not good. I wouldn't say so, because I think there is something the market is yet to take into account. So I would say, however, there is indeed price hikes on the horizon. Now, yesterday, Walmart, the biggest retailer in the US, they announced their earnings, and their earnings were actually indeed extremely positive. Was good earnings. But they are also one of many companies who've also said they are not going to do forward guidance, as in forward guidance to Q2, citing that at the moment the market is incredibly uncertain. But it wasn't just that. They also had another warning, and this is a big one. Walmart's, should I say, CEO Macmillan, he said, "We can control what we can control. Even at reduced levels, the high tariffs will result in higher prices." So the point being is this: yes, we did indeed get excited on Monday that US reduced China's tariffs down to 30% from 145%. And yes, China in turn reduced their 125% tariffs down to 10%. So again, that's positive, and we got very excited. But here's the thing. Before April the 2nd, there wasn't 30% tariffs on Chinese goods. There wasn't. So even if it's not 145%, which is just, wow, it's 30%, that is still going to make goods more expensive. That's still going to cost the consumer more money. And if we really look at it, okay, let's take into account everything at the moment, okay? 30% on Chinese goods is going to cost suppliers and retailers a lot. 25% on imported cars, apart from the UK with the deal. 25% on automobiles and light cargo trucks. 25% on steel and aluminium. It's not like we wiped the slate clean and we're starting afresh. Not at all. So that 30%, though a lot better than 145%, it's still going to cost money. It's still going to cost the consumer, and it's still going to impact the economy. As well as that, Jerome Powell spoke yesterday. Again, a little bit doom and gloom. He had this to say, okay, and don't forget he's the chair of the Federal Reserve. So he said this to say, "A critical question is how to foster a broader understanding of the uncertainty that the economy generally faces. We are entering a period of more frequent and potentially more persistent supply shocks. It will be a difficult challenge for the economy and for central banks." In other words, we're now not out the woods yet. In other words, though, yes, Monday was good news. Monday was good news, and it gave the market a boost. But a lot of the things which happened on the 2nd of April, Liberation Day, hasn't gone away. A lot of it's been delayed. And still, even, like I say, with 30%, it's still going to make goods far more expensive, and it's still going to impact the supply lines. And bear in mind, the US is a consumer market. It's still going to affect them greatly. So again, like I said, I think now, yes, by all means, let the market enjoy itself. It is positive. We've got some positive data this week, which is not as scary as we thought it would be. But I think we're not seeing the implications of that data yet. I think that's going to happen a little bit later. But anyway, let's move on to something else. Let's do a currency update. Right, so let's start off, of course, because the dollar started off a really good week this week. Very good week this week. And obviously on the back of this good news, which we had, markets was good news. However, since the last couple of days, though, the dollar has got a little bit weaker. And as you can see, though the euro was pushed by the dollar, touched 1.10 level, the euro has since recovered and the dollar's got weak, and we've now seen at 1.19. So again, we are ending the week. Though the market looks like to end the week with fifth day of gains, the dollar is looking to end the week with wiping out all its gains it made on Monday. Same with the British pound as well. Again, it pushed the sterling all the way down to 131. The sterling has since recovered to 132.89, and we can see this as well with the dollar index. Dollar index skyrocketed on Monday to about 101. But I mean, the dollar's been under pressure, quite a fair bit, especially since April. But that good news gave the dollar a bit of a boost. However, since then, the dollar attraction has waned, so to speak. And you see that with the yen as well. Again, so the dollar is not the currency of choice at the moment. The only thing which it is doing slightly better against is gold. And those of you who watched my program before, you know that I absolutely love gold. And I talk about gold a lot. It is indeed the first thing I ever traded. So I've got a big love affair for gold. Gold came under pressure, indeed, on the good news. And it's had, like I say, the majority of losses this week. However, this key level, this key uptrend here, as you can see, is holding for now for around $3,116, and it has since recovered. Obviously, gold is losing its safe haven status a little bit because there's a lot more optimism currently in the market, but still, it's still holding its own, still holding above $3,116, which I think is a key potential level. I am always going to be a bit of a gold bull, but the only thing worrying me about this current bull run is it does look like we've had a bit of a double top. So we need to keep a close eye on the yellow metal. And like I say, any further sort of excitement the market may feel about further announcements, I think it's good news, will clearly obviously affect the yellow metal. However, like I said earlier on, I don't think it's all over yet. I think we're just enjoying a little bit of false hope. Anyway, there's something else I want to talk about, which is happening actually in about 40 minutes, which again could underline my point that maybe everything is not so rosy. And that, of course, is the US consumer confidence, which is due. And don't forget that the last couple of consumer sentiment, or Michelin consumer sentiment, is at the lowest level since November 2022. And don't forget, that was the height of the inflation crisis we were all going through. So again, I think numbers, this is another interesting point. Numbers may be delayed, but it's the feeling and the sentiment of the consumer might give us a clearer picture of how everybody's feeling and what the market potentially is missing. Okay, because with numbers, there can be a delay to it. Emotions are almost instant. So this is going to be quite interesting to see. This is coming out again in, say, 39 minutes. Like I say, we have been hovering around the lowest level since November 2022. Are we going to see a scary number again? Now, as well as that, let's talk about what's happening next week, because we have a big week ahead of us next week. Of course, we have RBA interest rate decision, Canadian CPI, UK CPI, German manufacturing PMI, EU manufacturing PMI, US manufacturing PMI, and UK retail sales. But I generally think, in my mind's eye, is really to see this more development of this trade excitement which we got this week, and whether the market might start getting a little bit doubtful. Don't forget, this is indeed a live show, so you guys can talk to me anytime you like, ask me questions, share with me your opinions, let me know what you think. Is the worst over? Is there signs of better things to come? Or are we, like I say, are we living in a little bit of false hope that things aren't going to get necessarily better, or this is maybe where it is now is as good as it gets, like the video I discussed yesterday? Let me know your opinion. Let me know your thoughts. At the same time, let me know what you think about gold. Is gold's bull run? Is it holding, or is it going to go higher? It is a live show, so don't forget you can do that. Anywho, also, as well as that, if you're watching on YouTube and you quite like this sort of thing, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. And if you like this type of content, by all means, give us one of these. As well as that, I've noticed a lot of people go back and watch the recordings, which is great. I really appreciate that. Because I understand people can't always make the live shows. If you are watching the recording and you have a question and you want to say something, by all means, put it in the comment section below. I will see it and I will reply to it next time I go live on air, which of course will be Monday next week. So make sure you come and join me for that. Like I say, usually the shows are around about 12 p.m. No, that's not right. Well, usually 2 p.m. GMT. We're a bit early on Fridays, but usually around 2 p.m. GMT. So please feel free to come and join me for those shows. If there is no questions, not a problem. Leaves me to say then, if there is no questions, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your research, do your due diligence, and of course, the risks at hand before entering any trade. Till next time, every single one of you, trade safe.